Okay, then, look, we've got a good crew already started for today, and we've got a fantastic attendee list here today. So we thank everybody for signing up for this webinar. We've done them a few times previously, and what we're trying to do is educate everybody around IFRS 16, some compliance. We've got a fantastic panel for you today, and we'll go through it, and we'll try and give you some insights. Now, rules for the day, the way we're going to work it is we've got the panel here. We'll go through. We do have a question, the ability to take questions as well for this. So if you do have any questions, please just sing out and come through, and we can try and answer them at the end. If we get through a lot faster, we'll be able to take more questions, and we'll just go from there. Okay, we'll get into it. So as we're talking about today, I need to sort out my screen because I've got two screens going. But as we're talking about today, the agenda, and as you would have seen on the notes previously, we're going to see how we can reduce time, reduce complexity, and optimize your IFRS 16 compliance. Now, we'll break that down into a number of different parts, identifying and addressing the gaps within your compliance regime, practical tips. So obviously what we're here for, to find out, what sort of insights we can have from the team who are involved in this space, take practical knowledge, a lot of experience from client interactions. The benefits, normally they're quite obvious around those benefits, but the irony is until you actually see it, we've got somebody raise their hand, you actually don't know. So, putting out those benefits and just sort of spelling them out is always quite important as well. Cross-function collaboration. Part of this whole process is you've got the finance teams, you've got property teams, and you've got fleet teams. So the audit preparation piece that follows that is a lead on once you talk about how that cross collaboration works, and then actually saying what are our auditors going to look for. So it's really handy having Deloitte on there today. And then everyone's talking about technology and AI. So we're pretty keen to ask the panel about that and sort of see what we're doing. Okay, screen's not maximized, make it big. Okay, I will try and do that as well. Mr. Ego. I was trying to do that before, but it was going on to different screens. So while I go through this, I will introduce the panel. So today we've got Melissa Dupree from Deloitte. She's a senior manager there in the accounting, reporting, and advisory team. She has a really deep understanding in the space, a lot of client interaction around it as well. With her, we have Werner Roetz, a partner from Deloitte. He's actually accounting lead for the accounting, reporting, and advisory team. Brings a wealth of knowledge to this space, being very supportive of us over a number of years as well. Then I've got my old sparring partner, Stefan Ego. He's a CFO here at Quadrant. Stefan has a really, really good way of looking at things, both from a practical side, but also from the CFO and the accounting side. And then myself, Damon Kennedy, I run the sales here for LOIS. We probably won't go into actually LOIS itself, but we've got operations Australia, New Zealand, and also an alliance partnership with Deloitte. So hence how we all got here today. Okay, let's get into this. We're going to start off with a poll. How do you run your compliance? Is it Excel? Is it an accounting solution? Is an ERP add-on? Managed service? Or you don't actually know? So I'm going to launch the poll now. And if you can take a second to do this. Stefan, from your experience, where do you reckon this is going to sit? Where do you reckon it's going to finish up?
I reckon 26% at Excel, and then a mixture of other solutions. But yeah, you'll be surprised how many people use Excel. And those are the people that hopefully will be able to help out today.
What about you, Werner? Where do you reckon it's going to finish up?
If we have to put money on it, I'm going to go with 37% Excel.
Okay, Mel? And this is for money, of course.
I was overshooting it. I was going to go like 50 people would say Excel.
Yeah,
I
well,
think Excel is the predominant tool used for IFRS 16.
okay then. Well, we're going to end the poll there, and I'm going to show you the results.
Oh,
I'm closer.
74% on Excel. So, Mel, you get the chocolates. That's really, really interesting. We've done this a number of times previously, and I think Werner and Stefan would have been the closest on that. So around that sort of 30, 35% mark. So 74%. That is interesting. So we're certainly going to help you today on that Excel basis and see what we can do. Okay, let's get into it. We're going to talk about now identifying and addressing gaps in your IFRS 16 compliance. So, Stefan, I'm going to start with you. What areas might organisations be overlooking in their IFRS 16 process, and how can they address these?
I think the main thing is that with the transition back in 2019, everyone just wanted to get compliant. So you just literally went healthily you got the data, you put it in a spreadsheet or whatever you had to hand, and you made sure that you had some form of compliance. And some companies have changed to proper systems and the like, but most kind of made do with what was done at the point of transition. And as you can imagine, everyone has finite time and finite resources. So whatever was done at that point in time tends to be the default situation. And also, I think the thing with that is that you get used to whatever pain you have each month end. So you probably find that a lot of people are persevering with that position, and they don't kind of really realize or understand that it doesn't really need to take that much time or effort that they've kind of got used to almost.
Okay, and Werner, what about from your perspective?
I think, Damon, from what we see typically with clients, is the fact that, leasing contracts and leasing, arrangements with lessors are typically live documents that evolve over time and are subject to continuous modification. And, in the initial application of, as Stefan mentioned, in the initial application of IFRS 16 back in 2019, the consideration around changes and in-life changes to leasing contracts weren't necessarily built into the process that has been established for most clients. And typically, one of the biggest challenges at the moment is to then actively manage and keep track of these live and in-life changes of the leasing contract, such that you constantly go and remeasure and consider the application or in the implications in terms of the numbers that you have brought to book in terms of your right of use asset and your lease liability. And then typically also a delay in the communication between the operation side of the business renegotiating contracts and changing something in the leasing arrangement, and the finance team having to catch up at one point, typically after a reporting close period, to now restate numbers and reflect a new position moving forward.
So do you think, I mean, going back to what Stefan said as well, and intertwining with what you mentioned, do you think that it's people getting slightly complacent with what they've done previously and not taking the time to sort of do what you've mentioned? Or they don't have the time?
I think more from a finance function in general perspective, the compliance burden in terms of that's imposed on the finance function to meet the technical accounting reporting requirements as well as the corporate reporting requirements typically means that, an item such as IFRS 16 and managing the lease book and the right of use lease exposure is something that we tend to leave to month end and to the reporting period end, and then just deal with what is there and not necessarily sit back and reassess the process such that we can see how we can optimize and create efficiencies in that process.
Yeah, I think that's quite common. And Mel, from your perspective, what are some of the common pain points and challenges that organisations face when they're looking at this, and how can they overcome them?
So, look, I think the biggest pain point that companies face at this point in time is their access to information. And that's access in general. I'm not even talking about timely access yet. What we often see is that the people managing the lease portfolio, they stand very separate from the finance function. So you don't always have a lease agreement. You don't know what was the latest interaction with the lessor. So when you get to reporting, there's so much time wasted trying to get a hold of the person for them to go and find the drawer where they actually put the latest lease agreement or the signed agreement. And it's almost impossible to make decisions or do proper reporting if you don't have information. So I really think that's almost the basis where a lot of the issues stem from, is having access to information. And then the second point is the processes. If they don't have proper processes in place, they can't have proper control. They can't have segregation of duties or delegation of authority. It all just gets done as quickly as you can on the fly. And that's where you've got inaccurate information coming through. And I want to say that's why you're always on the back foot, always playing catch up, rather than having that information that you can have work for you. So that would be my two key things, is to say, have a central repository where you can have your lease information, and then put processes in place to make sure that that information gets updated continuously and has the proper control over.
Do you think that then also flows into that final point around the communication flows? So you've talked about data flows with regards to information, but that dovetails into the information, the communication lines as much as anything?
Yes, 100%, 100%. I think, again, that divide that we have means that finance is very focused on what they need to achieve. They need to achieve reporting and compliance, and that's all they want to do. And then your lease or your fleet or property managers, they just need to make sure that they renegotiate on time and all of that. But we never bring it together. So we don't get that lens to say, here is a consolidated view of my data. And now I can actually analyze this for trends. I can analyze this to pinpoint or identify anomalies, and then make my decisions based off of that. So give the lease managers that information, that they can take that into their negotiations, and then effectively say, look, if I compare this whole portfolio, your lease is standing out. What are we going to do about it? So definitely, I think that needs to be brought together.
I think that's an excellent point. I mean, just to add on to that, Stefan, I know that we've had discussions previously with regards to validation as well. So even getting to a point that you can actually validate what you're doing is accurate. Talk us through that sort of gap, certainly around payments, etc.
Yeah, I think because of the nature of IFRS 16 and the focus on payments and payment dates, at the start, people would take a lease and then they would go, right, I need to pay 36 payments of $10,000 or Rand or whatever. The trouble is that they're not, to Melissa's point, they're not then getting information when that changes. And most leases, especially property, have a number of points that you need to capture, where they might have market rate reviews or CPIs or the like, and those points change. If you've got a decent system, you might pick up that the payments are different to what you're accepting. But what you really want is you want that data coming through well before it actually happens. So the better systems and processes can do that. But I think most people, and especially those with spreadsheets, are just happy to get the data points at some stage. Whereas where you want to be is you want to be getting that information up front. So like Mel said, that you can actually make good decisions, because the really key one is, have I renewed my contract in a timely fashion and not kind of incurred penalties or the like?
Yeah, well, we've had one recently, which is a retail store for a large telco, and it's one of the most successful stores. You miss that date, it costs you millions. But we're not talking rounding errors and things like that, are we? We're talking some really big numbers with some of these renewals and things like that if you do miss them. Now, as we go into our next panel question, I think data flow and communications can be a massive part of this webinar, and they're building blocks on what you've got to do with regards to a process. Stefan, I'll stay with you. we're talking about complexity, recommunication lines. If we're actually talking about the cross-functional purposes and the cross-functional teams being finance, property, and fleet, why do you think there's a divide there?
It's simply people have functions that they must do. So if we look at property people, their job is to maintain the property and negotiate those commercial terms. They're very focused on that, and then they want the best deal for their entity, and that's what they should be, to be fair. What you want is you want to enable them to still do that task, but be providing that information around the payment schema back to finance. So at the moment, in most entities, there's a disconnect that probably finance only find out about it after the payments are made, which really is too late. And then finance really can't do any analysis, let alone compliance. So naturally, there's a conflict there that you want the best outcome in the fastest process, but you need that data flowing between the parties. And at the moment, I think most entities, except those with really good practice, are not able to achieve that simply because the volume of data and the systems between them both.
So if I hear you correctly, and because everyone on this webinar is finance, it's everyone else's fault and not finance?
Yeah, no, unfortunately it's not. It is one of those things where if you want a good commercial outcome, you need to let property people do their thing. But likewise for the compliance side of things, you need to know that that's happened. And then lastly, of course, now and again, people forget to do things, and that's kind of the worst outcome. So to your point before, retail in particular, in malls and the like, if you forget a renewal or rollover or whatever, it can have quite material consequences.
Werner, anything else to add on that?
I think touching on what Stefan is saying, ultimately, we need to be in a position where we've got access to relevant data that can allow us to give quality and comparable information in our financial statements associated with the exposures that we have. And, our ability as a finance community to present the data sets and have confidence in what the data set is highly dependent on our interaction and our communication flow with the rest of the operation side of the business, in terms of the contractual arrangements that are being executed, but then not to be a participant after the fact in terms of having to execute and account for a contract that has been engaged with, but rather be proactive in terms of our involvement and our shaping of a specific contractual deal, such that we can navigate as the finance community what the accounting implications will be associated with that contract. We often find complexity and ultimately audit findings associated with, bundled contracts that contain lots of different asset types or asset classes within a componentized lease contract, which is caught after the fact and reflects very negatively in terms of the finance function's ability to control and report accurately on data sets. These items can be managed by being involved at the start of the process and having that working relationship consistently and continuously with the operation side of the business, such that you can do proper reporting and accountability for what has taken place in the business.
Yeah, it makes sense. Now, I think as we move into the next stage of the webinar, I'm going to do another poll quickly, just about how long it should take, because I think it's probably handy with regards to understanding, getting efficiencies, etc. Like some people make an efficiency and all of a sudden it halves the time, but if you're taking 5 or 6 days, who knows what, it might be something else. So let me just go back to this poll and I will launch it. How long does it take you to do your current IFRS 16 compliance process each month? Mel, where do you reckon this one's going to sit, given that you're running hot on the poll so far?
Pressure's on. I feel like we're going to end the majority 4 to 5 days. 50
Okay,
did me well, so
Stefan?
let's say 50 again.
After my first selection, I have to go with Mel's choice because she won hands down. So she's definitely.
Werner?
Look, being also the CFO of our own business inside Deloitte, I'm going to say less than 1 day because let's be honest, month-end close is a very tight timeline.
Mate, you get the chocolates on this one. So, most people are 1 to 3 days, and a fair chunk at less than a day. I mean, a few more than 5 days. All of you, what would you say should be the optimum? Doesn't matter. I mean, obviously, the portfolio size is a consideration, but really, how long should it take, Stefan?
It's got to be less than a day. I mean, this is a compliance issue. You need that automated. You need that system process. It's got to be less than a day.
So, if knowing our client base, one of the biggest ones that are thousands of leases, they're taking sort of less than a day?
Yeah, they are. I think you got to be smart about it. Don't wait till the end of the month to do it. Do it after your payment run. Make it really efficient. But yeah, most of them are less than a day now.
Cool. You guys, you got any different thoughts on that, on how long it should take? No?
Look, I think anything between 1 and 2 days is a good close.
Yeah, I'm with
Okay.
Werner on that.
We'll try and get it less than 1. I reckon that's what we've got to aim for. Okay, practical tips. This is what people have come to ask. What practical tips can you share for improving the process during these business critical periods? Mel, let's start with you. What are a couple of tips that you would go straight off the bat?
Straight off the bat, I think, evaluate, assess your processes that are in place, identify the key parts in the system where, errors tend to come in or where things get stuck, where data gets stuck, and see what you can implement at that part of the processes so that information runs more smoothly. I think I did touch on it because in my mind it's such a big thing, but have one central place for your information. I really think it's hard to enforce, but try to enforce it so that, in that central folder or share drive or wherever you keep it, you've always got the latest information. It should be habitual for the property people to go and load it there so that you can always see, what is the latest, and the finance people can go and access that. If I think about implementations, we have to allow such a long period to start up the project because step one that we ask for is if we want to automate this, we say, give us all of your lease agreements, give us all of your lease calculations so that we can go and automate that. And just for the client, especially if you work across border or you've got a large number of transactions or frequent modifications, to source that information takes them such a long time. So I think it would be so valuable if clients could, start that process even before you look at automation. Just get that in place. I'm obviously very for an automated system because I think doing repetitive tasks all the time is a bit of a waste, but it doesn't have to be one big bang effect on your company and very disruptive. You can do it in bite-sized chunks if you go and analyze your process and see where it gets stuck and just implement something to make that a little bit better and a little bit better until you get to a point where your information it's pure, it's readily available, and then you can start seeing, how can you automate, how can you optimize within your function to make that information work for you.
Do you think that there's a lot of these processes and a lot of organizations, what I like to coin as Stockholm syndrome, because they're stuck with the pain. They've had the pain for so long that if you pinch yourself 100 times, after 50 times you stop feeling it. Do you think it's the same with a compliance process like IFRS 16, where people are just so used to it, they think that is the norm, and because they haven't taken that step back to do what you just said?
I do think so. And what we usually see is when things start happening, a lot of things go wrong very close to each other. That's really when they they kind of face the fact that they have been putting it off for way too long, and now it's a very you have to react to catch up and fix everything that went wrong. So yeah, exactly like you say, entities or companies have to be careful to not get too accustomed to that pain, because when it rains it pours. So when things start happening, they can happen fast.
Yeah, thanks for that. And Werner, anything to add to that? What sort of tips from the top?
I think ultimately, especially in our participants having indicated that the bulk of them are still using Excel in preparation for year end. Let's start off to make sure that those Excel formulas are still accurate and has not been broken in any way or form. That would typically help you to get to a faster close. We often see the controls associated with Excel calculation sheets that drive the lease accounting. Somebody goes in, they were supposed to go and view something and extract a number for reporting purposes. And they ended up breaking a formula, and suddenly everything breaks. So as we are getting ready for month's end and as we are getting ready for year end, a couple of days in advance, just open up those Excel sheets and make sure that you're not getting any of those value errors or F errors or whatever the case might be. Just to manage the process more effectively as you're going forward. We're seeing a lot of focus and attention coming through, and we'll chat about the current focus of audit in one of the upcoming questions. But we're seeing a lot of focus and attention coming through in terms of version control, integrity of calculation sheets, and the overlay of estimates and judgments that are coming in there. And it's very, very quick to be found wanting when auditors are trying to inspect the manual calculation sheets that supports these calculations and find inconsistencies or formula errors or deviations in terms of the process. It's then very quick that it, as Mel mentioned, starts raining and it escalates to a lot of other processes and execution.
No, that's a really, really good point. And yeah, we'll touch on that a little bit later on the all-important auditing aspects. What about you, Stefan? Slightly different perspective on it. What are a couple of tips that you can sort of bring from a system perspective?
I think to Werner's point that if you spend a lot of time on something like that, you kind of get used to it, and you forget that when you get to year end, you have to then take people through an audit profile, and they have to look at these spreadsheets, and you got to collate that data, and then suddenly that thing that cost you nothing is costing you time and money, right? I think where we see kind of what would, I guess, call best practice is those companies that have sorted out their process and sorted out their system to do it once a month, batch it up, do the volume, push the button, get the results, right? And I think it's all very easy to say, but having said that, if you spend the time and work out that process and have a decent system, it can happen. And we often see with business cases that a business case will go, oh, we kind of get these numbers, it doesn't really cost us anything. Meanwhile, someone is spending significant time every month end doing the same process. It's flawed, it's risky, there's no control. And then you get to year end and you've got the auditors climbing all over you. So I think it's one of those ones where look at your process. If you have 20 leases, it's really going to be quite a different process to someone with thousands of leases. And I think what we've seen is, if you've got 20 material leases, system and process is really key. But likewise, if you've got thousands of leases, trying to do it in spreadsheets is just very hard.
So what does best practice look like then?
Oh, well, I mean, I think we've all discussed about information. So you got to get that information in the first place. So you can have the greatest process or system in the world, but if you're not getting the information, it won't be very good. But once you get that information and you have a system that's easy to use, and people understand what they're doing, that makes it a lot easier. We obviously do a lot of implementations with clients, and you would always say a system is better than say Excel. But what I would also say is one of the benefits of Excel is everyone knows how to use it, right? So don't try and put something in that is like driving a space shuttle to the moon, because then you lose that benefit of the system. So I think it's horses for courses depending on the company, but the benefits you can get from a usable, functional system and good data, you'll see it. You'll see the benefits tenfold.
Mel, you've done a lot of these practical implementations, literally, like you said, from way back at the start of the process and actually trying to find some of these boxes with leases in and dusting them off, etc. If you had, your elevator pitch to someone around best practices, what would it look like? What would you tell them to do?
I think let's paint a picture. From the start, if you look at your team managing your leases, I think ideal situation would be they would have a place where they can see their whole portfolio of leases. They can see the statuses. They can see when renegotiation is due. They can see what they are currently paying, what the different assets are, all of the information around their leases. They can see it in a single view. And then they should get notified, this one is upcoming for renegotiation. This one is expiring soon. All of that to prompt them to start taking action in time. And then once they start actioning that, they should have input fields where they can update the key variables, and those should be linked straight to finance. So as soon as they make a change to any of the components of the lease that have financial impact, it automatically goes through to the financial system. They can start processing those modifications, because I don't think we've touched on modifications a lot, but I don't think the property managers or the fleet managers always know what factors actually have an impact on finance. So better to have a system that can already do that distinguishing factor to say, yes, this has a financial impact, or no, this doesn't. And then it goes straight through to finance. They've got that information well before month end, and they can start pushing it through to the results. I think that would be best case scenario. Oh, and then also, being able to toggle between views to say, this is where I am, but if I want to forecast, or if I want to model out the impact of certain changes to a lease, having a space where they could do that to see what would the impact be before they actually commit to any of that.
Just to play devil's advocate, and this is one for you, Werner. We're talking about systemization, which is obviously something that we all believe in. Should people be afraid of implementations? Because you think of if anyone thinks of a software implementation, straight away you're going, oh, it's going to be extra work for me. It's going to take forever. It's going to be a pain in the backside. Should they be afraid?
Okay. I'm going to give away my age. And from my age perspective, I'm typically concerned when it comes to new technology. And, luckily I have my kids that keeps me aware of all the changes that are taking place. But when it comes to the implementation side of any form of software or automated process, digitalization of a finance function or a finance process, the first 3 months are always going to be tough. Getting used to the functionality, getting used to the change in process and the new ways of working. But I think what is important is having an implementation partner that supports you throughout the journey, that can assist in terms of the initial take on and transition and reconciliation to make sure that you are comfortable and confident with the data that has been processed in there and is available in terms of support, both from a technical and systems operational perspective. Typically, the first 3 months is going to be tough in terms of new ways of working, and then it's going to settle down and it's going to move on as life as usual. In the instance of automating a component or a portion of it, this is not a full-blown ERP implementation that we're talking about. This is a digitalization of a specific function, of a specific subject matter that assists us in terms of efficiency and effectiveness in terms of our close process. It doesn't have to be terribly complex, but it needs to be something that you will see the benefit and you'll realize the benefit quickly. The return on investment is quite important.
Yeah, well, that's a great segue, because I think all of those are great. So, if we're going to go through, and if you want to carry on, what are some of those benefits, like ROIs and things? Because ROI you normally don't associate with compliance. It's normally two ends of a magnet. They don't quite go together. What are the benefits of optimizing this process from an IFRS 16 perspective?
As Mel mentioned it in one of the earlier questions, Damon, I mean, one of the key things is access to data and the ability to analyze. I think, and we're all guilty of it, especially in the finance community, that we are set in our ways and we are stuck in terms of ticking and bashing. And those of us that still grew up pre-IFRS, IFRS in South Africa didn't exist till too long ago, and went through a paper-based audit days. If you went down that journey and that route in your career development, you still like your green pen and your red pen and your blue pen, and you're ticking in and you are signing things in person in wet ink and making sure that you've closed it off and signed it in. Now, if we are looking to optimize this process, what is the end goal? And the end goal is to gain access to robust, reliable data sets that can inform your operational business imperative decisions moving forward. I think one of the key benefits that we see when we engage with clients is the ability to go into a renegotiation armed, a renegotiation of a lease contract and a lease term armed with the necessary information such that you can negotiate a beneficial outcome to you and not be in a position where you are forced to accept the landlord's view of life when it comes to potential increases and access to underlying additional service and support for the property that you may or may not be leasing at that point in time. So the access to data helps our finance officials sit down and do what they are skilled in doing and do what they are technically actually paid to do, and that is to analyze, to pick up trends, to interrogate, to question, and then to implement corrective measures, rather than sitting down and just continuously trying to make a amortization schedule balance and trying to find the casting error in terms of carrying forward these numbers into your financial statements, and trying to come up with a narrative disclosure in the financial statements that explains the circumstance, or in a board pack or in a management account pack or whatever the case might be. But actually focus time and attention on utilizing the skills and the experience that these individuals have gained over the years.
Okay, and Mel, from a personnel perspective, actually, as opposed to personal, what have you seen, sort of some of the results, some of the implementations and process refinements that you've been involved in of late? Because I think people forget about the human factor as much as a lot of the time.
Yes, they do. So I think, like you said, the more manual, the more error-prone processes are, and high volumes just increase that risk. So a lot of errors slip into the processes, and interesting strange errors that you pick up. That just causes some inconsistencies, and because you do 2,000 of those, if your amortization schedule doesn't balance to zero, you really can't see it anymore. And then it can be something so silly, pointing to the wrong cell or things, applying incorrect rates or incorrect discounts. So we definitely do see those coming out. And it's just it works out well if you identify those, you pick it up before the auditors, because like you say, it's not a fun conversation to have if those get picked up by the auditors and you go, oh, oops, all right, and then you correct. And some of them might be fine, but you don't want instances of those going into prior period errors or things like that. So yeah, definitely that's another key benefit is that, or let's say limiting or minimizing those manual errors.
And no one wants to get told off by the auditors, that's for sure. Stefan, from your perspective, we're talking about benefits for personnel, commercial stakeholders, etc. What do you see it in a sort of a nutshell?
I think when it first started, everyone was focused on compliance. You needed a right of use asset and a liability, and you needed in your accounts for your investors. That was the complete and utter focus. I think as time's gone on and you have a centralized database, you can start to do more. So the obvious one to Werner's point is, well, actually, let's start comparing these assets. So now, if you get the data points of square meterage and the like, you can compare of rentals on a square meterage portfolio approach, and you can actually make savings. Like, why is this warehouse at $100 a square meter and that one's at $50 a square meter? So that comparison and commercial outcome. So that's a real obvious one as you start to connect the data points and give people that information. I think the other one that's often overlooked, and Mel talked about it, is it's painful for people to do this process when you're using Excel. The conversations I have with CFOs where they'll say, well, we get the numbers every month. It's fine. It seems right. But what they don't probably realize is they're running risk because they don't really know if the numbers are right. And meanwhile, someone is spending significant time collating those numbers, putting them into not fit for purpose systems and reporting. And this day and age, your human resources are valuable. So do you really want them doing that kind of stuff when you can automate and have a much better process? Because why would you have someone updating spreadsheet formulas to get a right of use asset when they could be looking at the commercial outcomes of each of the warehouses in a certain region, right? So I think initially it was all about compliance. So we just want my right of use asset and my liability, whereas now I have a database that has good data. Why do I not optimize that data to actually make some good commercial decisions, but also just get the best out of my people that are involved in the whole process?
Yeah, look, there are three. Thanks all, because they're three really good points that you all made, and I think this flows into more about the impact. And I know, Werner, this is one of your favourite topics. You know, what are auditors looking for? What should people be wary of? I mean, we've touched on a few things already. I think one of the benefits that we said before is risk mitigation, because, like I said, you don't want to be tapped on the wrist by an auditor saying, "Hey, that's not right," because all of a sudden they start drilling down and everyone's life becomes a little bit more hard. So, you know, what are you seeing? What are the Deloitte audit teams and that sort of stating that they're seeing, or what people should be aware of at the moment?
Look, just to be fully transparent, I am still an auditor. Yes, I'm an auditor. It's like you go to Alcoholics Anonymous. I still carry an audit portfolio, and I do sign off audit opinions over and above the accounting and reporting advisory focus that I have in the business. So from an audit perspective, I think what we are experiencing at the moment, and what we're also seeing with clients that we are supporting and assisting from a technical accounting advisory perspective, is our colleagues in the other audit firms are also focusing and asking on, is let's wind back to 6 years ago when we implemented IFRS 16, and we had all these technical debates and discussions associated with the take-on balances. Now, when we converted from IAS 17 into IFRS 16, there was a lot of focus on trying to get the book as low as possible. Very liberal application associated with short-term lease exemptions, low-value lease exemptions, and then also, the componentization of leases associated with variable and fixed components and different asset classes bundled into a single lease. Now, we passed it. We got over the line. We got the numbers in the book, and we continue on that journey over the last 6 years. Now, what has happened of late is in 2024, the IAASB initiated the IFRS 16 post-implementation review, and through that process, they are now putting requests out into the market for commentators and commentary associated with what has been achieved and what has been the experience in the application of IFRS 16. just as a reminder, the intention of IFRS 16 was to present better quality information and also better comparability in information, bringing in your lease portfolio more akin to what other companies are doing that are adopting a borrow and acquire approach rather than using a lease access to asset approach in terms of forwarding or progressing their business. A lot of what the commentators are seeing, and currently there's a request for information out, and the IWSB is expecting commentary back by October 2025. What a lot of what the commentators are saying and seeing is that we may inadvertently have, created challenges or created an opportunity to challenge our estimates and judgments as management and finance professionals in terms of the initial take on. Because if we are in lease renewal 3 or 4 of that exact same lease that we argued for short-term exemption back in the day, what are really the chances that this is a short-term lease? And should we not have incorporated and capitalized that lease as of day one? Similarly, some of the bigger leases that have been brought to book on a 4 or 5 or 6 year lease term that's coming into expiry at the moment, that are now potentially already running into its 3rd or 4th renegotiation period. To what extent are we actually doing a renegotiation? And to what extent are we just, continuing with business as usual and just adjusting our lease factors in the contract to something that's more market reflective? And what we are seeing is auditors are asking more of these questions, challenging management's estimates and judgments, and immediately through that process, opening up the question around potential restatements of the past or changes in the estimates and judgments such that the lease portfolio and lease book look different into the future. So a prospective application of it. Now that always becomes a tricky discussion point between management and the finance function and the external audit teams, but certainly a renewed focus. So what do I expect to see when we are assisting clients? I expect to see the external auditors asking, challenging management more in terms of the underlying asset portfolios that are linked into a contract, the variability that's been built into some of these contracts that resulted in them being exempt, as well as the value at which these assets have been capitalized or considered for capitalization. A much more robust focus. And as the IASB is now asking these questions, the firm's technical departments are busy building a response. And as the firm's technical departments are busy building a response, undoubtedly the message is filtering down into the audit team. So we're seeing a lot more of these questions popping up. And what do I expect to see as the outcome? I expect to see a growing in the right of use asset base of certain companies. And I also expect to see a growing in the lease liability associated with those. And, a change in the way in which these expenses therefore recycle through the income statement and impacting profit and loss into the future.
Okay, that's really good insight. Thanks. Stefan, from your perspective, what's been the impact of IFRS 16 on that decision-making process for organisations that you've seen?
Well, it's interesting to Werner's point with the IASB asking for that feedback. It's been mixed. Literally in New Zealand and Australia, we've got some roundtables coming up in the next couple of weeks to discuss that. I think there's probably an acceptance that we are where we are and we need to kind of keep it the same. We're not going to change things. But to Werner's point, some of the judgments that were made were probably a little bit off the point. Especially in reasonably certain lease terms, has been very inconsistent. And back to the earlier point that to make these judgments is fine, but then to be able to report on it is another thing. So the people with spreadsheets, if you said, hey, tell me all the leases where the contractual term is less than the reasonably certain term, which is a pretty common occurrence in IFRS 16, most could not say. So again, with a proper tool, you'll be able to do that. And I think what's going to happen is, as the IASB goes through this kind of analysis of what's gone on, it's actually going to make that audit review probably harder than it's been before, because as an auditor, you can't kind of ignore what the ISB is saying. You need to look at that. And therefore, if you're looking at maybe Excel or not very good systems, you actually can't answer some of these judgment questions. So the reasonably certain lease term, if you haven't got a flag in your system, you won't know what you've done. It's just there. So I think that from an audit point of view, people have kind of transition was a big thing. Yep, that's cool. Let's get it done. And there was a lot of scrutiny then, but it could be done in a spreadsheet. But as leases change and those judgments disappear into history, everyone thought they were okay. But I think now with the review point that's coming up, and as Werner said, it's this year, auditors are going to be going, well, actually, that lease, you assessed it out for another 20 years on these renewals. Is that really what it is? And if you don't actually have those data points to point it in, then they're going to have to go and find it. So we are starting to see it where clients have not captured that data or not put it into the system, and they're going to have to go back and start to look at that information. And that would be painful.
Now, I'm mindful of time and appreciate everyone's time on this sort of thing, but I mean, everyone wants to talk AI. We've been talking about systems, we've gone from Excel and the like, and I mean, technology and continuous improvement. Mel, from your perspective, what are you thinking on how AI can potentially help teams with their IFRS 16 processes, etc.?
Look, definitely AI it's very, very topical. We've got people inquiring about it all the time. And I think it is very powerful as long as it gets used responsibly and possibly phased in to the system, to do it in a very controlled environment, a little bit at a time, so that you can test that you're comfortable with the output that it is returning before rolling it out to your entire finance function. So maybe just doing it in a bit of a stepped and controlled approach is probably what I would suggest and urge clients to just keep in mind as they consider AI.
Yeah, I think there's lots of potential potholes there. Stefan, from a system perspective, where do you see AI being involved, and what it can offer customers and potential customers?
Much to Mel's point, it's obviously a great enabler. Everyone sees the ability that it has, but trying to find the user cases that are applicable yet controlled are sometimes slightly harder. It was probably almost 4 years ago when everyone was focused on extraction of leases, going into systems that you could just do it and it'll be fine. There was a lot of failure where the data was not right. It's now improved a lot. We've got some pretty cool tools now that can read leases and get the key data points. But it is still a relatively new technology, and you do not want to do something without that overview and that review. However, the enablement tools and the efficiencies, it's definitely going to help, but it's not one of those things that's a magic bullet and it will solve the problem of collating your data. And that's a dangerous position to take. So used effectively, yeah, definitely. We're seeing more and more AI tools and we're building it into the systems and the like. But like you said in that stat on the slide, people aren't maybe quite ready for it, or maybe don't quite have the checks and controls to make sure it's working effectively.
Well, I think it all gets back to the point that Mel made initially around, data being the key, data flows, etc., and obviously AI feeds off the data. So if that's not correct or in a format that can be read, etc., then rubbish in, rubbish out. So I think that balancing piece is making sure all your ducks are in a row to start off with. So I think we're all in alignment there. Okay, now that's got us through to the end. So a couple of quick takeaways, I think, before we sort of wrap it all up. Obviously, there's going to be gaps for everyone in their processes. We've seen here a lot of people on Excel. there are a number of issues with Excel that we've seen that we can help you. So reviewing that process isn't a tough step to take. I think don't be scared of it. IFRS 16 is about compliance, but there are actual other efficiencies, and Stefan made mention of a number of commercial efficiencies and optimizations that you can make because you don't normally associate ROI with compliance, but you should if you look at it in the right way. If you do the right process, you choose the right partners, etc. around that, there is a way to actually get some ROI on it. Yeah, compelling events, we talked about it, end of year reporting, etc. As you get into it, this is the time that you should be doing it. Once you've finished that, once you've finished and you've had feedback from your auditors who have said, hey, you need to do this, it's a time to take a step back, a breath, and actually just look at your process, because you'll be surprised what you see. I would say that most of our client base does their IFRS 16 inside a day. That should be the goal, and it's achievable because we've seen it. Investing in good process reviews and automations, it speaks for themselves. Like we said, utilizing people that have actually been here before, like the likes of Mel and Werner here and their teams, their respective teams at Deloitte, actually will get you a lot of benefit, because if you do it half-baked, you get the half-baked results. I think the final point around AI, etc., you've got to have that strong data. It gets back to the initial point that Mel made. So it was great you made that, Mel, because I obviously did this slide before we started talking. So appreciate it. Thank you very much to everyone for joining us today. Please reach out to us if you have any questions, because both myself, Stefan, Mel and Werner are all available. We'll be in touch as well. Stefan and I are actually going to be in the African region in October, so please reach out to us. We'd love to come and say hi. Stefan's bringing his credit card, which is really rare, so it'll be like sighting a leopard when you go on safari. So you should actually get in touch with us for that. But again, thank you to the panelists, Mel, Werner, Stefan. Always a pleasure, and we look forward to talking soon.